station of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Well, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Marlo Jakadavi. Be strong. Go with your heart and believe in miracles because anything can happen. Market-wise, let's take a look at it out here. We had the Dow Industrials up 129. NASDAQ was up 50. S&P's up 13. Gold contract up $5.20, trading at $1,327 an ounce. Silver up 14 cents at $21.07. Platinum up 23 bucks at $1,509 an ounce. Copper flat at $3.20 a pound. Light sweet crude up 6 pennies at 105.43 a barrel. Bonds, we had the 10-year down 10 ticks at 124.27. 30-year off 28 ticks at 136.10. King dollar up 24 ticks, trading out at 79.83. The euro down 12 at 136.80, and the yen up 21, trading out at 101.54. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You hit 1978. You got to a higher high. You did 582 million versus 790 versus about 1.9 billion. Bottom line, you're at a higher high. You can go higher. Dow Industrials. We take a look at the Dow Industrials. Dow Industrials closed at 16,956. Now, what the Dow did is it got up and over its high of the 20th, up and over its high of the 9th, and failed on both of them. This is going to get really intriguing how this whole thing shakes out. So we go back to the 9th and the 20th of June. And what we're going to look at here is that, okay, so what is the volume characteristic on the 9th? On the 9th, what you had 607, and on the 20th, we had 1.722 billion. So the bottom line in the Dow Industrials is that you had the test of the high, you had lighter volume, you had a failure. Pretty wild. Inside the Dow out here today, this is what you had, meaning moving it forward. Big Blue, IBM was up $5. Visa was up $3.53. Pfizer was up 40 cents. Travelers was up $1.14. Though it was actually Big Blue that was putting the big juice into it. Bringing it, well, it didn't go down, but taking points off it was Goldman Sachs, Coca-Cola, JP Morgan was up 33, and DuPont was flat. NASDAQ Composite. Composite goes top side, 1.9 billion shares. The Composite was up 50 bucks, big number. When you're talking percentages, the Composite was up 1.15%. Bottom line, you get higher price, you can go higher. The NDX 100, the 3 Qs, what we have with the 3 Qs, she went up $1, had 31 million shares traded. Small caps, let's go over to the small caps. So what the small caps also did, the small caps, we used the IWM, tested the high of the March 4th and failed. Small caps got to a price point of 120.97, closed at 120.02. You benchmark was 120.56. That was the last high. That was on March 4th. We did volume today of 62 million, and the volume characteristic from the 4th was 112 million. It's pretty intense, actually, because what was unusual is this. On March 4th, what was unusual is that you got up to that nice high. You know, you came off the February 5th bottom of 107. You go straight up to 120. You had a high volume high up there. Then it totally gave it up. Went from 120 all the way back down to the 107. We marched forward again. Actually, what the small caps had done is this. The small caps didn't march forward when the S&P started. Then the small caps got an expansion, price and volume on the 5th of June. Built a little more cars. Got another one out here today to get up and over it, and it was a failure. Gold contract. We take a look at gold now. This is a little tricky in here, and this is what it is. Gold and silver, folks, okay? So gold today did 112,000 contracts. We're at 1327. We had that wide price spread, accelerated volume on the 19th of June. What we had out here today is that you're coming up into your swing point that was from April 14th. That's 1331. Got to 1335. We closed at 1327. It's going to need more cars in order to get the higher price. And what you had here is that it was right across the metals complex. So what I expect you're going to probably have is that you're going to have some kind of slight pullback into the bottom of the consolidation that we've been in for a couple of weeks here. I suspect we're going to be on lighter volume. Then once again, we'll make a run for this 1392 area. This in here today, well, that's gold. Let's go over to the silver market because all the metals did the same thing out here today. If we go over to silver, we take a look at silver. This is what you had. Silver today got to $21.25. We are at 20.06 right now. Silver continues to be stronger than gold, and that's the real cool thing here. I'm not expecting a big pullback, but it is going to have to build up a little more cars in order to basically get, in silver's case, to run up to that February 24th swing high. Inside the XAU and the HUI, same deal. Got over them, closed underneath them. That's saying you get a small back off. A few of the equities had already done 100% move, meaning that they did the full move, got over them, pulled back. I expect, you're going to have to build some cars in order to get the higher price. Bonds. We go take a look at bonds. First, the 10-year. 10-year bond, she does 782,000 contracts out here today. And each and every time bonds are pulling back, folks, it's on lighter volume. That 782,000 contracts are going into 118,000 contracts. We take a look at the 30-year. 30-year pullback with 214,000 contracts. 214,000 is going into 322,000 contracts. In both cases, that's saying bonds still want higher price. King dollar, we go take a look at King dollar. King dollar is coming into a May 9th and 8th days of strength off the bottom, and we're coming into that with much lighter volume. The real key is going to be, will we get into the very bottom? We're at 79.84 right now. 79.60 was the second day off the bottom on the 9th. The high of the low was 79.61. I expect what you're going to see is it's going to try to push this into 79.61 in a bit. If we go over, let me just see that at the close out here, I believe, let me just see what Pandora's doing, because Google just bought some kind of a service. So now Pandora closed at 29.60. She's trading 29.60. So Google is buying Songza, G-O-O-G-L. Let's see what this is. Okay, Google is buying startup Songza Media, bolstering its music service as it tries to draw away users from rival Apple. Google has no immediate plans to change the song service, which selects tunes for listeners based on the person's activities and the time of day. Bottom line is Google's getting into everything out here. There's no two ways about it. Some of the high volume stocks out here in a low volume market. We had GoPro. That thing is going. That's for sure. That was up 8.25 at 48.80. You had Twitter up $1. Micron Technology was up $1.03, trading out of 33.94. You had GM up 129, and the thing with GM that is pretty amazing. Recalling 25 million cars, and bottom line is that they're selling a lot of cars too. And GM did 23 million shares today, going into 25 million. Yeah, GM is at 37.50. It looks like that he's going to hit a little resistance at 38. You stay right there, folks. We're coming right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We ended out, finished up 129. NASDAQ up 50. S&P's up 13. As we do each and every Tuesday at 20 past the first hour, we have our man, Mr. Basil Chapman. Don't forget, folks, Basil has an outstanding show right here at TFNN, broadcast every trading day, 11 to 12 Eastern Standard Time. You can also test drive his newsletter. The way you do that, you come over to our website at TFNN. You go under newsletters, trading newsletters. You see the opening call right there. Basil Chapman, what's going on?
How are you?
I'm doing great. You having a good day?
A good day, thank you, yes.
Cool, man. So, let's see. What are we looking at here?
We're looking at the Dow chart.
Yes.
And I'd spoken to you last week about this particular chart where there's quite a clear up channel. Within the up channel, there were a couple of cup formations that just went past the left side lip to extend higher, which is the reason why there's an up channel. And then all of a sudden, from the 9th of June, we've seen basically a sideways trading range. And the sideways trading range in the Dow is between under 17,000 and 16,700. So 3 points a range. And when you see that the other indexes, some of them are going much higher, the Qs went much higher.
Right.
The Dow says that this is basically a very selective market at this particular time. And within the Dow itself, it's very selective. Some stocks are doing well. You saw that IBM was doing very poorly, and then suddenly today it has a big move. And you also saw today that there was a mixed market when you got to Ford and General Motors. Ford made a new recovery high and then pulled back, and General Motors took the bad news of the recalls and shot up over a point. So that's the way this market's been responding. It's kind of news-related and it's momentum-related. So what I wanted to show here is that the Dow is still very important, because if the Dow cannot break out into the low 17,000s and sort of stalls right here, it's probably going to put a drag on the indicate that there's upside limited activity in some of the other indexes. Now, what's very interesting about this, what I said to subscribers in my opening call this morning, is that this candle that you can see, if you're looking at Tiger TV, there was a large candle on the 18th of June. And what happened, it had come down from the peak that was made on the 9th of June at 16,970, pulled back to 16,703, and had three very small candles, but with slightly rising highs and slightly rising lows. But that maroon line, the 9-period moving average, was in fact a barrier. Then out of the blue, it opens on the 18th and comes down a little bit, and then boom, it rallies and has a very strong day. And I said there's a possibility that if there's a breakout above the 9-period moving average today, which at the time was, I believe, at about 16,860, I said if it breaks above that, then there could be a move to the upside. So today we got it. What's different about this candle to the one that was made back on the 18th is that this one made, in fact, a new recovery high. In fact, it's an all-time high at 16,998, but we didn't close there. We closed quite a bit under 17,000. So what this is saying is that if you're in, I'm going to move the chart, I'm going to another chart right now. If you're going to a Netflix, say, you've got something completely different. Let me just move this away. That's the 120-minute chart. Going to all-time highs above the 458 round number high, which gave it one of its biggest pullbacks. So, and you just mentioned GoPro. We missed it by, I think it was about a point getting in yesterday morning. And look at this thing. It's just screaming. It's at 49. But the most important thing is that right now, because bonds pulled back, but bonds in the TLT, if you look at the two, they in different modes right now. The TLT is acting a little bit differently to bonds. TLT dropped very sharply down 1.24, and yet if you look at bonds, USU 14, they were down 29.30, only 0.66, whereas the TLT was down much sharper. And I'm looking at this and I'm saying to myself, I don't quite see money flowing out of bonds right now into stocks, but definitely money is flowing into that. There's a certain rhythm you and I have been through because we've been in the market a long time, where all of a sudden the layperson wakes up and says, you know what, I kind of missed some things, and they jump into those high momentum stocks. So what happens in the next few days is going to be very, very important, because to put it into the context of money coming out of something, and in this case, there's certain sectors I'm looking at. I think that the healthcare is just getting a little bit toppy here, and there's certain stocks within the sectors. But the most important thing right now that I'm looking at is that the volatility index, I spoke about the bonds just a moment ago. Look, the volatility index could do it tomorrow, but it didn't go to the low of 10.34 that was made the other day. So some institutions, I think, are starting to get a little nervous, and they're starting to put money into the VIX. So I don't want to argue with this market. Remember, there was very famous technician Marty Zweig. He always said, don't fight the Fed. But at the same time, we do our homework and we look at things. And for the move in the Qs, I've got it in leg C. This is the QQQ Trust series in the daily. And the weekly is in E. But the MACD and stochastic are still very good in all three time frames. So I'm going to be a little bit careful about the short side right here. I will look at individual stocks, but I think that we've got, and very often we see a rally into the July 4th weekend.
Right.
I think there could still be a little bit more to go, but now it's becoming frothy, where it's quite much easier to identify the froth, because you can just see it in some of the very volatile and strong momentum stocks. And I think when you see that, then you've got to say to yourself, this is a time where maybe you can close your eyes and just grab some of those stocks, but you also have to be a little bit careful, because reversals come when you least expect it and when things look the absolute best. So I'm a little bit cautious in terms of...
You're saying close your eyes and grab your nose?
I'm saying if you want to trade, close your eyes, and that's the way it goes. Yeah, but there's no question about it that if you look at certain, I wanted to put something into context. Let me just show you Ford right here. Ford is in leg E in the Chapman wave, and what we look at in the Chapman wave is you want to go from the lowest, most identifiable low bar, and you want to go to at least a D. Well, it made the peak D at 1712 on the 9th of June. It pulled back a little bit to 1640, and then it ran very nicely, and it went to today's high of 1740. Now, what's different about this stock is I see it as a nice steady move to the upside. We are long this particular stock. I see that the weekly charts holding the 9-period moving average, the monthly chart had made a peak. Let me move this to the side. Had made a peak C at 1802. The most recent major high was 18.97 back in 2010. Pulls back to $8.82. Then runs up, and now everything about it says that it should make at least a leg D above 18.02. When you look at General Motors, there's a little bit of a difference here, because it seems to me that there's strong action, and the activity today says that there's something else going on with General Motors, that people are beginning to ignore the bad news.
Yeah, no doubt. 25 million ignores. That's either... maybe that says something about what people are paying attention to. Unbelievable. Listen, Basil, have a great one, safe one. You stay right there, folks.
Have a wonderful fourth. Thank you.
You too, Basil. Thank you so much.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finished up 129, Nasdaq up 50, S&P's up 13. Let's go take a look at the financials first. We'll take a look at the XLF. XLF out here today up 14 cents. We're trading at 22.88. We got up and over the high of 22.93. You hit 22.98. We did 28 million versus 32. This is kind of intriguing, actually, particularly for the financials. So your XLF in general failed. Inside the financials, if we look at J.P. Morgan, and this is really intriguing, especially on a day when they're running the market like they have. J.P. Morgan couldn't move. J.P. Morgan Chase up 35 cents. We're at 57.57. This is after had a downdraft out of $61. You're right into the second part of that downdraft, which came on the 10th of April. That's where we went from 59 to 57. We did 29 million shares, and you're doing 14 million here. Morgan Stanley, we take a look at Morgan Stanley. Morgan Stanley is trading at 32.32, and she is at the top of her range. She didn't get any traction out here yet either. When I say the top of her range, she was trading out at $33 in January. It gets down to the lower end of that consolidation, which is 28. So when we do look at both of them, it looks like that they also are going to pull back into lower price. We go over to the BRK. BRK right now, Berkshire Hathaway, folks, is the largest weighting structure inside the XLF. If I bring this up, we bring up the B shares. We're at 127.24. There wasn't much movement out there today, 68 cents. We take a look at Visa. Did have movement out here. So let's go over to Visa. This is a counter trend bounce. Visa's down from $232. You're at $214. You had volume out here of 2.7 million, and you're going into 6.1. Pretty intense, actually. Big Blue is the mover, no doubt, inside the Dow Industrials today. If we go over to Caterpillar, this gets interesting because Caterpillar has the largest price expansion, percentage expansion inside the Dow Industrials. If we take Caterpillar and we take a look at it, and we'll put this on a 10-year monthly, what you're going to see monthly. Actually, I put in a 15-year monthly, don't I? Interesting. Okay, so this is what we're doing. Caterpillar, first high, 2011, 116. Goes from 116 down to 67, and right at ice, and that's not right at ice. Okay, 177 million against this. Well, this is what we're doing. Check this out. It's pretty intense. Okay, so when Caterpillar came down the first time off its high, 173 million, you got into the $100 price point. Last month, we went up with 68 million. What does it do? It goes from 102, it goes from 116 down to 67. Makes its way all the way back up to 116. Volume comes out of it again, not as much, but 154 million, comes down to 78. So bottom line is that, is she going to tag the 116? I don't think so. What she's trying to do right now is this. She just tagged the bottom of the highs. The bottom of the high is 109.88. So we'll see how that baby shakes out. But when you do look at the Dow, if I bring this Caterpillar back, and I bring it back on a daily basis now, that was the monthly basis. On a daily basis, the downdraft that was out there from the 20th of May looks like it wants to be hit, and that's 104 to 100. Big Blue. Let's go over to Big Blue. Big Blue put the juice inside the Dow Industrials out here today. She was up $5. She has been having a tough time holding on to price. Now, she still didn't get juice inside it. She had expansion of volume, no doubt. But she needs to, we did 186. We're at 186. We did 6.6 million. She's going to need, as she tries to get into 187, she doesn't need 11 million the first day, but that's what she's pushing into. She's going to need something in that area, meaning you get up into it. If you get 9 or 10 million, that's not a bad start. You get 6 million, that doesn't fly. She hasn't even got to her swing point yet. The swing point on the way up is 187.64. Those swing points are crucial, folks, because that's where the market talks, walks, and squawks. Now, let's go over and take a look at a couple, the XAU and the HUI. Actually, hold it. Energy. Let's go to energy first. I'm going to use the XLE, looking at energy. We're at 100.16. If we take a look at some of the stocks in there, you had ExxonMobil up 68 cents today. The rest of them, you had ConocoPhillips up 38. Oxy was up 17. Let's start with the big dog. That is ExxonMobil. She didn't get traction either. This is so interesting. This is a July 4th phenomenon, no doubt. ExxonMobil, she's off her high of 104. She's at 101. She has some juice down there. CVX, Chevron. This has been a little rocket ship, no doubt. Same setup, though. She come off the high. Well, she actually has volume at a high. That's interesting. 133. She's got some juice up there. So that 133 can get tested, no doubt. Okay, now let's go to the XAU, the HUI. So XAU out here, this is what we did today on the XAU. Philadelphia Gold and Silver, I think it's the ARCA, they call it the ARCA. Philadelphia Gold and Silver Index. So what this did, it got to a price point today of 101.90. That got it over the highs that were generated the 24th, 101.47. Closes underneath them. What that sets up is it's going to make a run to the bottom of the consolidation it's in, which is 97.12. That's the XAU. HUI, the Gold Bugs Index, the ARCA Index, the same type of setup. We got to a price point of 242. We closed at 238. She's going to make a run somewhere down to this 231. Now, in both cases, though, folks, I expect what you're going to see, you're going to build more cars, you'll have light volume on the pullback, and still want to make this run up here to the 261. If we take a look at some of these 3D printers out here, let me see what these look like. So, well, look at the short position. So you had DDD, which is 3D Systems, that ran up 366 today, but it was as high as $69. It closed at 63, and no doubt, man, Dave White's telling me that they're squeezing the shots, and you can see that because what does happen is that it's a 33% short interest, folks. 1 out of every 3 stocks have to be bought back. That is pretty intense. If we go over to X1, that was up $5. That was up 10%. This is also a 30% position. Same setup. Oh, this is a nice attack. This is a beautiful attack, actually. It's pretty amazing. VJet. This is a... I don't even have a... Oh, this one's interesting. I don't even have a short position on it, meaning it doesn't say, but you can see the same deal. These are equities that absolutely got killed, and evidently they do have... Well, the first two we brought up, DDD and X1, absolutely have short positions. Each one of them, DDD is 33%, X1 was 30%. Short positions, folks, you don't want to be short any equity. I would say that even to start approaching 7 or 8%. 10% Nova, don't even think about it, because that means that 1 in every 10 shares got to be brought back. Now, let's go over to the IBB. The IBB, folks, is crawling its way back right to the highs. And the IBB, remember, is the first indice that fell apart in January, actually February, bringing down the NASDAQ. And, it was just a straight down move. So we are at 263.12. 270 is the high. We're up $6 today. So it looks like, guess what? We're going to be basically getting into this high in the next couple days. When you put this up on a weekly basis, it's an absolute classic. The classic being that it's going to be a test of a high. And what this does is it'll set this up in a large consolidation, because we came down on 20 million shares, 10 million shares, 10 million shares, 12 million shares, and guess what? The largest week we ever had was only 5.9 million shares. This is just setting up so sweet. It's amazing. So the market's always waiting for something. July 4th week, what we do have is this. So today's Tuesday. You have a chance to get volume in the marketplace tomorrow. Thursday is not going to be any volume. It's going to be a slow day on Thursday. Coming back on Monday also. Monday will be a slow day also. Tuesday to Friday to Thursday of the following week, then you're going to have some action inside the marketplace again. Excuse me. We take a look at the IWM we talked about. That was a failure out here on price and volume. Got up and got into that high, though, from February. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. The Dow finish up 129. NASDAQ up 50. S&P's up 13. Johnson & Johnson was up $1.25. Caterpillar 50 cents. ExxonMobil 68. Oxy 17. Walmart 21. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mob BI in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We had Schlumberger down 10 cents. Transocean was off 38. Let's go over and take a look at the Schlumberger next. We're staying with this energy sector. So Schlumberger is trading at 117.58. This is after a monster expansion last week. Schlumberger had gone from 106 to 114. And if we take this and we put this on a monthly basis, what you're going to see is that she's right at her highs. The high in Schlumberger is 114.84. That was in 2007. Crashed down to $35. She's all the way back up there. And she's come into that, with some juice. Last month she had 131 million shares traded. It's still half, though. Still half of the highs that were generated in 2008. And half of the 2007. It's pretty amazing. Yeah. No, 131. 1 second. Yeah, 131 to 270. And to 250. Yeah. So that says quite a bit. This is going to get really intriguing because when you get an expansion like we did in Schlumberger, or in fact, let's go over to the IWM for a second today. Because what the IWM had is it had an expansion of volume, but not what it was going into. Had the price spread also. Then gave up, however, half the price spread. That's a big number. What the IWM did out here, we went to 120.97, sold off to 120.02. Your swing high is 120.58, and your characteristic is 64 versus 112. So tomorrow is going to be a big number. In fact, let me do this. I can do this right now. I'll put this on a weekly basis, and we can see what the stat is on the weekly. So the weekly is 270 million. And thus far, we've done 98. It's not bad. If it kept up, that means yesterday we did quite a bit. We get, 2 days, 98, that's 180. You get close. If we did the same amount of volume for the next 2 days, that would just about equal. Let me get this. Whoa. Yeah, 200. Yeah, it would. It would be very close. So it's going to be crucial tomorrow and tomorrow. There's going to be, the volume is going to be light on Friday. Tomorrow is going to be the big number. The reason being is that tomorrow's the big number. We'll see where that does shake out. We take a look at we're going to stay with the energy sector for a bit here. Why energy? Because what you had, see, the IBB had come off the highs. Energy had come off the highs, made its way back up into higher price. Then came off again. Oxy is it trading at 102 Occidental. And she's got juice, man. She wants to go downtown. Oxy came off its high with 5.5 million. She's at 102 right now. The high that was generated is 105. Got to higher price today, couldn't hold it. So that's saying that she wants to get down to the 101 area. If we go look at a couple of these inverse ETFs, if we look at DUG, Doug, this is the double XLE. She acted correctly also. What she did is this. When the energy came off the highs, DUG went from 36.14 to 37.88, had 203,000 shares traded. We pulled back into that today with 52,000 and reject lower price. That's going to get interesting. ERY, we take a look at the direction, 300% energy bear. and how that traded out. What that did, that was down 3 pennies today. When that come off the bottom, went from 12.32 to 13.15 with 1 million shares, comes back today and tested with 252,000 shares and does reject it. So it's going to be a sector we're going to keep our eye on. We'll stay with that. We're going to go right to the oil market. Where is she? CLQ4. Okay, so oil is at 105.37. She still wants higher price. She still wants a spike in here. She's got a lot of volume in this today. We did 210,000 contracts. Not bad, hanging at these highs. You have two separate spike highs out here in oil, and they want to get hit, folks. So we'll see where this whole thing does shake out. There's no doubt that politically in the Middle East, it's a mess. Well, actually, militarily, too, not just politically. Bottom line is that there's large problems over there. And there's a lot of oil over there. So, we'll see just how this is going to play out, meaning the oil market, the spikes, and if we take a look at that continuous contract, you have two separate areas that, had spiked before and then gave it up, by the way. They gave it up right away. 114.83 was the high that was generated in 2011, and then 112.24, and that was just last year. And both times when they gave it up pretty good. We went from 114 down to 77. Then we went from 112 down to 91. Those moves, no doubt, were fast on the way down. Inside the commodities market out here today, we had lean hogs. Now, that was limit up yesterday. It was almost limit down today. Let me just see how that did trade out. You're at 130. It was down 2.8. I think three pennies, I think, is the limit. Yeah, it was. No, it wasn't. Down. Oh, they must have expanded it. So down limit today was 127. So the hogs basically pull back slightly. The live cattle, it's amazing. Right now you're at 151.80, and when you're talking steaks, you're going to be talking some real money here. It looks like they want to go up and test the highs once again. So cattle, has this high volume high hanging up here at 153. That 153, I suspect, wants to get tested. Sugar was down, 1%. Wheat was down almost 1%. Soybean and corn. Soybean, corn, and wheat, they got absolutely smoked. If we go take a look at wheat, this was yesterday. It wasn't today. They continued lower today, though. Wheat is at 572. Now, wheat's on the swing low is 565. But the way wheat looks to me right now, this is a disaster. It could go from, 8? Is that 860? Yeah, it's almost 3. Yeah, we can get into the $4 price point, which is pretty amazing, folks. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. World Cup soccer, we are tied with Belgium right now. 0-0. It's halftime. You stay right there, folks. We'll come right back. Dow finished up 129. NASDAQ up 50. S&P's up 13.5. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Rich in Taunton, Mass. Hey, Rich, what's going on?
I just want to let you know that I listen to a bunch of radio shows and financial related, and TFNN has the best stuff, most interesting, even if you don't understand everything about it. It's really good stuff.
Thank you so much, man. I appreciate that. I love the part about not understanding it. No, I know it's a different language. I mean, well, the way I speak is a different language anyway.
Yeah.
Oh, listen, man, I appreciate you listening out there. All you folks, thank you so much, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day. And you get to that at TFNN.com. Always remember, folks, Whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Right now, the World Cup, it's 0-0, and they're at the halftime. Let's take a look at one of our... This quote is by Dan Zadra. Surround yourself with people who believe you can. Market-wise, let's take a look at it out here. We had the Dow finish up 129, NASDAQ up 50, S&P's up 13. Now, if we go over to the Dow Industrials first, we take a look at it. This is what you had. Big Blue was the mover inside the Dow Industrials today. Took it up. It got to 16,998.70. Your first high that was generated out here on the 9th of June was 16,970. Failed that level. Second high that was generated on the 20th was 16,978. Also failed there. We did 686 million versus it's about 1.4 billion. So the intriguing part here is that, number one, you had the wide price spread. So what I expect you're going to see is this. When you get wide price spread, folks, you know, markets like to move higher, that is, okay? So I suspect that this testing procedure at the high for the Dow is not done yet. I suspect you're probably likely going to see it again tomorrow. Cash S&P. What do we have with the S&P? That's at a higher high, held over the holes, over the highs. That means you can get to higher price. If we take a look at the SPY inside the correlation, SPY did 90 million shares out here. The swing point that it was taken out was 105 million shares and 196 million. So bottom line, that high of 197.63 can get higher. NASDAQ Composite did get higher by 1.7%. NASDAQ Composite was up 50 bucks. We are at 4458. It did 1.9 billion versus 1.8. NDX 100 also got higher. That closed at 94.94. The IWM, this is one's really intriguing. Why? What you have is this, is that got into the high from the 4th of March. That's 1,213.55. That's where we went to today. We closed at 12.05. The high that it was testing was 1212.83. So the small caps itself actually backed off quite a bit from the March 4th high. The thing that's amazing about the small caps, man, when those things move, they move. And that's both ways, meaning move down and move up. The last time that we were at that high, 1212, then the small caps went nonstop down to a 1082. In fact, the small caps had the largest correction of the indices when we talk the Dow Industrials, the NASDAQ, or the Russell 2000. If we go over to the IWM and we look at the correlation, this is what it is. The high of the 4th of March was a 120.58. We got to 120.97. We did 65 million shares. The high that was testing had 112 million shares. So you can see what you have there. You had failure on price, on volume. You know, the small caps don't necessarily have to retest the high of today. I expect you're going to try to get some retesting, though. The reason being is that what we have is that you have the July 4th week. As I said yesterday, it likes to run into the July 4th week, run topside. It would have been really a nice, subtle signal if it hadn't just gone flat. But the bottom line, it ran. Overseas, let's look at overseas right in between all of this. The DAX in Germany, the UK, the FTSE 100 UK, that was up 58 bucks. The DAX in Germany, what we did there, she was up $69. So both of them basically did finish at their highs. Gold. Now, let's take a look at this gold market. Gold market, folks, and silver market got over the swings, closed underneath them, light volume. That's telling me that we're going to have to build a little more cause, meaning sideways movement, slightly back, before we go head for the March highs in gold, the silver highs, and silver. And that goes right across, meaning the gold stocks, the silver stocks, the XAU, the HUI, they all did the same thing. Bonds. What do we have with bonds? Guess what? They pull back but with dramatically lighter volume. Bonds still want higher price. It's absolutely amazing. But guess what? They want higher price. The yield on the 10-year out here today, 2.565. So it only went up 5/100ths. 30-year bond is even stronger than the 10-year bond. 30-year bond right now is trading out at 136.11. She pulled back with 218,000 contracts. That is in correlation to almost 400,000 contracts. Wants higher highs. King Dollar. What is King Dollar doing? King Dollar is going right back into the May 9th and May 10th. Signs of strength, how it came off the bottom. And you're doing it with lighter volume. So, excuse me. What is happening right here, which is pretty neat inside the King Dollar, is that that's going to be a 100% move also when she gets in, down. Well, I don't think she's going to get as low as the 79.06 level. She's at 79.80 right now. 79.61, which is 200 ticks from where we are, is the top of the low. So we'll see how she shakes into that level, and if, in fact, she rejects that level. After the market close out here, you had Google. Google was buying a streaming music service, Songa. Bottom line is that, let's see, it wasn't affecting Pandora, and I looked at it. No, it's still not affecting Pandora. Well, 30 cents, big deal. Pandora was closed at 29.60. She's trading at 29.30. It seems like it's almost the same type of service as Pandora. Pandora, as an equity itself, has some problems. Pandora's off the high of $40. You're at 29. Inside the market out here today, GoPro went. There's no doubt about it. This stock was up another $8 today in the last 4 days. So it came out, let's see, what day is it? It's Wednesday. So, no, it's Tuesday. So on Thursday, the stock closed at $31. Right now, it's $48. That's pretty intense. That, folks, is really intense. That gives it a market cap of $6 billion. $6 billion, you know. And that's a company, by the way, though, that has made money and will make a lot of money. I don't know if it's a company that's, you know, if you did an analysis on it, if it's worth what it's trading at, but the bottom line is that it's not an IPO that came out that hadn't made money. Some of the high volume stocks we had out here in still a low volume market, Micron Tech. Let me go pull up Micron. We had Victor yesterday call about Micron. So Micron was up $1.03 today. Micron has finished an ABC structure on the way up, and it's extended itself. So you had volume today of 36 million. Should have been about 50 million. Well, if I pull this back, so more than likely she's going to do a 1 to 1.382 ABC structure on the way up. So the question is, what is up there? Let me put this on a... Yeah, I would say, you know, this is an equity that, not parabolic yet, but it's getting close. It's gone nonstop from 533. We're at 33.98. Last time it had any juice in it is all the way $18. Well, you can make a case that it's $25 actually, and that's where I suspect you'd get the pullback when we're out there. The IBB, folks, okay, is approaching its high once again. If you remember, the IBB was what took the NASDAQ south. You know, of course, it came all the way back plus. But it was the IBB that went from 275 straight down to this 207 area. Let's go to Shevin in Carlisle. Hey, Shevin, what's going on?
Not much, Tom. How are you?
I'm doing great. How you been?
Great. You know, it's summertime. It is hot. We're getting your weather.
Is it? Yeah. You know, well, today, folks, we've had great weather in Florida, but, man, we're getting our man Andy Hecht on next, and he's steaming eggs on the sidewalk in Las Vegas, and we can do it right here today. There's no doubt. Hey, you stay right there, man. It's so good to hear from you. You stay right there, Shevin, all right?
Sure.
We're going to take a short break. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. You stay right there, folks. We got Shevin coming back. We got Andy Hecht coming up. We want to hear from you. We're going to come right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had Walmart up 21. GM was up $1.40, $1.29. 3M was up 132. Right now we're talking with Shivan from Carlisle, Mass. We're going to be talking about ULTA. So this is Ultra Salon Cosmetics in fragrance. The low is 80. The high is 132. So what are we doing here, Shivan?
I picked it up before that gap up.
Oh, nice. Okay.
And I'm trying to decide, is it going to go test those highs or is it going to come fill up the gap?
I know. Seriously, that's a tough one. It's not. What happens, folks, is that Shivan knows as well as I know is going to fill that gap. The gap is way too big. The real question is that does it get to test the high of the gap once again, which is 98? Before it comes into that level. So we went down with 995. Yeah, I'd be careful, man, because it's really subtle. But you see those last 3 days, we went down with 911, went down with 995, and then yesterday you did 750, and today you go up with 705. It's like, well,
okay.
$95. Let me put this in a weekly for a second. So in a weekly, on a weekly, the weekly saying that, hey, listen, man, this thing wants to go to 98 again, man. Do you know what I mean? So you're inside, yeah. Hey, this is a way you can trade it. Don't let it get inside 9170. Now, what I'm doing there is this. The 9170 is from the downdraft when this thing went from 128 to 91. And so that's what happens, folks. If you get below that, then it's like, okay, you can go to the lower range. You go to $80, and he doesn't want to give that up because he's got some bucks in there. But the way that this traded, the way this even traded today, the way this traded today, it got below 90.82 this week. It's at 93.41. That's saying a rejected lower price from last week. And that's saying that, hey, it should run to 8. Yeah, this is saying it can run to that 98. In fact, you can run to that 106, man.
Great. Thanks, Tom. Tom, you were saying earlier about the bonds, the price is going to go up. Now, I am long on TBT. I've been picking that thing up, anytime it gets around 60-ish, because the long-term downtrend looks like it's finally broken about a week ago or something. How can the bonds going to keep going up then? Something here doesn't add up to me.
Okay, so let's look at it, because the trend has not been broken, man. I mean, this. So he shot the bonds, folks, using the TBT, which is the ProShares 200% inverse correlation. So if I bring you over, so watch, because you got the 20-year there, right? I'll bring you over to the TLT.
TLT, yeah.
And so the TLT is the long position, and I'll put this on a long position, and what you're going to see is that when we came back on a monthly, right? When bonds broke topside, which no one thought they were going to, in August of 2011, the TLT went from 97 to 112. It did with 489 million shares. Well, we tested that with 146 million and never got to the low. So you can definitely make the case that, okay, listen, the bond market might be over, but right now, the TLT, the 10-year, the 20-year, and the 30-year are going back to ice. So, I would make the case that it's a bull, but let's say it doesn't even matter, because what we're talking about now, this is just a counter-trend bounce coming back to ice. And ice itself, shivering, okay, and the 30-year is 142. It starts at 142 and goes to 146.
Okay.
And if the volume continues to act like it is on the 10 and the 30-year, though, it's going to go higher. Coming off these lows, the bond market, the actual future bond market, has, done a couple good ABC structures on the way up. It can fail at the 142, though. That's the bottom line.
Okay. Thanks, Tom.
Cooking, brother.
Hey, nice talking to you.
Yeah, happy 4th, man. Tell everyone I said hi. Tell your little girl I said hi, all right? How old is she now?
11.
Oh, my God. That's crazy. 11 years old.
11 years old, yeah.
Oh, man.
I said hi. I'm having a nice 4th, Tom.
You too, man. Have a great one. Have a safe one. Time flies, folks. Listen, yesterday's gone. Tomorrow's not here. What are you doing right now? Make sure you enjoy yourself. I remember when that little girl was born, because Shiffrin called in like the next day or the day afterwards. As I'm going to sneeze. Sorry, folks. Excuse me for 1 second. There we go. Got rid of it. Now, folks, let's go over to our man, Mr. Andy Heck. don't forget, folks, every Tuesday and Thursday, 3 to 4 Eastern Standard Time, Andy has an outstanding program right here at TFNN. Also has a great newsletter, the Technomental Commodity Report. Now, the way you get the newsletter, you come over to our website at TFNN. You go into newsletters, right at the front. You go into trading newsletters. You see the Technomental Commodity Report. You can test drive Andy's letter, 30 days, absolutely free. Andy Hecht.
Hello there.
What's happening, man?
Well, markets are interesting. I see a lot of things I want to go over with you today.
Well, the commodity markets are really moving, man.
Yeah, they're moving. They're moving all over the place. Some are up, some are down. But you know, gold's been giving signals. 2 weeks ago, Janet Yellen came out. She said interest rates are going to stay low for a while. Gold zooms $50.
Yeah.
Right? Then, you know, we've seen a divergence. We see gold laying low. We've seen the stocks continue to do well. Today, we see platinum spike.
Right.
$30. Now, you know, I thought in platinum, when they settled that strike, I thought it was going to be like one of these sell the rumor, buy the news kind of thing.
Okay.
And it has been, and platinum's done well. But I think platinum is telling us that the whole sector is very healthy here.
This is what I like. First of all, I don't like how both of them traded today. I loved how they traded yesterday, okay? You know, as we were talking later last night. But today it's like, oh, man, you got over the high. This is what ends up happening, folks. On a holiday week, the last thing if you're a bull, last thing you wanted is to get over the high and close under the high. It's like, oh, man, what do you do? With light volume, which they did.
Yeah, I know.
But what this is, so it's like, okay, you're going to pull back a little. That's not a big deal. And, and that's where I suspect it's going to happen. Now, this is what's really cool, though. So that's on a technical basis. A fundamental basis, which is really cool, is this, is that I was bringing up yesterday that there's been no huge buying in India, no huge buying in Asia, okay? But it's like, okay, man, guess what? Gold's going up, okay? So someone's buying it. Now, this is really cool. What just got reported after the close out here is that this was the first time since April that we had the GLD actually have to go in the market and buy gold.
That's good.
Oh, it's huge. Because what happens, folks, is this. When those tides turn like that, right, that is the natural buyer. And when they're selling, of course, that's what killed it. Well, guess what? When it turns and they're buying, and this is the first time since April, I don't have the exact day in front of me. I can't find it, though. But it's a long time. Let me tell you something, okay?
You know, I know you're a little concerned about the action today, but when we come back from the break, I want to point something out to you that maybe you didn't see about today's action.
I better get a new pair of glasses. I like that.
Okay.
You stay right there, folks. Andy Hecht, Tom O'Brien. We appreciate you growling and prowling with us out here. Don't forget, folks, I want everyone to have a great 4th of July, but no drinking and driving. Get a cab. Do anything. Walk, bike. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow finished up 129. Nasdaq up 50. S&P's up 13.5. We're talking with our man, Mr. Andy Hecht, and we are talking gold right now.
So, Tom.
Yes.
You know, I know you're disappointed with the action a little bit today, but consider this. You got a day, holiday week. You have equities, big upside today.
Right.
You have the bonds, the 30-year bonds to the downside.
Yeah.
So a little bit higher interest rates. And you have the dollar a little bit up today. But gold is still up $5. You'd think that given all that, gold should have pulled back a little bit today, but it didn't.
No, I agree. I agree. My point, no, I agree. What it is more than anything is this, is that, okay, so when you get that, and it's a small failure, but hey, the failure's a failure. You got to 134, I believe. Yeah, 134. Mm-hmm. You closed at 26. So on a holiday week, what I just didn't like is that I didn't like that the volume contracted so much when after yesterday. See, when gold likes to go, it likes to really go. Do you know what I mean? So
I agree.
It's like, okay, so you're going to now, what you want to do is trying to get into this 1305 level, So we'll see how it shakes out.
Well, we'll see how it shakes out. I mean, I think the platinum move today was very positive for the whole sector. Anyway, we'll see. You know,
Yeah,
there's 2 more trading days.
The platinum move. Now check this out. This is pretty intense, folks. The platinum move is saying to me, you get 1489. This is intense. That will go to 1589.
Yeah, my target's 1600.
Right.
Platinum.
Right.
Yeah.
Which is a beauty, man.
And that's technical. On a fundamental point of view,
yeah.
You lost 5 months of production.
Right.
The market's in deficit, meaning that there's more demand than supply.
Sure.
And finally, the production costs went up. Why did production costs go up? Because they gave the miners a big raise.
Right. Yeah, not a big raise.
Well, it's a raise, and you know as well as I do, it is very expensive to pull platinum out of those mines.
Oh, what happens with ore, folks? Rock. Platinum is the hardest thing to get out of rock. Period. You know.
Absolutely.
Now, what I also love though is that how silver reacted. Silver's still strong as a bull, man. I mean, it failed, but the bottom line is that it didn't fail on volume. Silver had the volume too today.
Yeah, and silver, silver at 62.5 to 1, it's still so cheap relative to gold. Silver should be north of $24 with gold at 13.26.
Well, last night I'm driving home, and one of the big bullion dealers, folks, happens to be right here, and I know him very well. And I'm going by his place, and he's got the silver sign up. And I'm saying to myself, man, silver is so cheap. It really is. And it has to do with what Andy just said in the correlation of where we are right now. There's been plenty of times that silver's $20, but guess what? Gold's is, 800 and 900, not 1,300,
Right,
so, yeah.
Right. 62 to 1. 55 to 1 is the target on that. And we'll eventually get there. We usually do. So let's talk about some other things. Let's talk about grains for a minute.
Yeah.
Whoosh to the downside.
Yeah.
Big time.
Big time.
Got killed. I mean, the USDA came out with a crop progress report on Monday, and they said that everything is hunky-dory. So soybeans yacked. So did corn. Wheat to a lesser extent, but that's been going down for quite a while. But the interesting thing that I picked out is that soybeans are 11% more. There's going to be 11% more soybeans this year than last year.
Okay.
So soybeans have some downside. Corn, on the other hand, corn plantings this year are the lowest since 2010 because inventories are so high. Now, corn inventories can't stay there forever. This stuff rots and deteriorates.
Sure.
So I'm looking for that relationship
to change. The cattle farmers are going to have plenty of money to... They're going to have it both ways now. If corn's so cheap and their cattle is expensive, man, they're going to be having... we should be in the cattle business, man.
There's not so many head to feed. That's the problem.
Yeah.
That's the problem. That's why those prices are high. Oh, man, are they high.
517. So corn can get down to 350 or something.
Yeah, I'd say 375. Next level of support on corn, I peg at around 406. That should be the next level of support, but that was the January low. But we'll have to see. It's all up to the weather now, Tom, with all these things.
So, hey, this is going to get kind of interesting here. Let me pull this up. See, because if these, corn's really got whacked, right? I mean, corn was at $6.
Oh, a while ago.
Yeah.
A while ago, yeah.
Well, no, you know what I'm doing here right now? I'm correlating this to, okay, what are they at? What are they going to get this year versus last year? Because farmland itself is worth a fortune because, though, of these crops being worth so much more.
Right.
Those crops start going a lower price, that farmland's going to be in trouble, man.
It could do, but there's a lot of buyers of farmland under the market, and if they don't buy it in the U.S., the Chinese will buy it. Don't you think?
Listen, I understand what you're saying. I understand what you're saying, no doubt.
Talk about the Chinese for a minute. Let's put a copper chart out. I want to show you something. I was looking at this morning. I was laughing to myself.
Copper, okay.
We crawled back to where we went down from.
Yeah.
All right? We're like 320 and change here.
Okay.
On March 7th, we went from 321.40 on March 7th to 287.80 on March 19th. In 9 trading sessions.
Right.
When we got down to the lows, there was a big announcement. The Chinese bought one of Glencore Xstrata's mines.
Yes.
And what has copper done since?
I know, man.
It's gone right back up.
Now, see,
so corn gets cheap. Maybe the Chinese come in and buy the farmland.
Well, you know what's so cool about this, right? And this is where, folks, if you've listened to Andy's show, there's one thing of trading commodities like we trade them back and forth. There's another thing of how you traded commodities when we're in the business, meaning live commodities, real commodities, pushing them, right? And how the Chinese are trading them.
Yeah,
and
physical.
And physical commodities, physical anything trading is totally where it's at. Because
it is.
If you have the patience and you have the money, which the Chinese have both of, there's a lot of other people that do also, you are the market. I mean, that's the bottom line. You are the market, because what's happening, folks, is that you already understand your parameter, and those parameters, when they're coming into play, guess what? In this particular case, you're diving, you're ready, and then they're transporting it. You're taking a commodity or any type of good from one place to the other. You're taking from a place that's worth less money to a place that's worth more money.
That's right, and you're actually, when you get like the Chinese or like the Glencores or the Nobles of this world, you actually are going in and you're financing the operations, which you're guaranteed the offtake. So, you see the flows of the market. You see how much is actually being produced. You see how much demand is. And you're in the middle. It's a beautiful thing. There's nothing like it, seeing the whole picture. When we look at prices on the future screen, it's great. The technicals are wonderful, and they tell you what the herd is doing.
Right.
But, these other things, they're really controlling and manipulating the herd.
There's no doubt. And
right. They push chart points.
Well, because what happens, of course, is that, one commodity is intermingled with another one in a huge way.
Right.
When you're talking, when we're talking about the spreads, or we're talking about basically feeding cattle. It's a big one. It's like, man, this is a nice little deal, man. No doubt about it.
Let's switch gears, because I've seen one other thing that I really wanted to point out to you today that's very interesting. Let's just talk crude oil, which has kind of been very quiet.
Yeah.
We're up above the level that we broke out from, but we haven't had any big geopolitical news this week out of Iraq, so the markets have been stable. But one thing I've seen very interesting, if you look at the price of August 2014 crude, it's 105.20, roughly. If you look at the price of December 2017 crude, we're at 89.40 roughly.
Wow.
All right? That price is a discount. But when crude was $3 lower on the active month, that far out contract was $82, $7 lower. So we're seeing a strengthening in the far out deferred prices, which I think is a direct result from fear about what's going on in the Middle East, and fear about the future prospect of U.S. companies like ExxonMobil, of British Petroleum, Royal Dutch Shell, being able to source crude from places like Iraq, places like Libya, places like Iran, other oil, Saudi Arabia. I think that some of the risk premium is being transferred to the back end of the curve, which I view as bullish longer term.
Yeah, I'd agree. What I thought, I found actually, it seems that, I found this disturbing actually. And what it is this. This morning, right, on CNBC, this is interesting. So you get Simon Hobbs, right?
I was probably snoring at the time.
Yeah, that's all right. That's cool. So what happened, folks, is that there was a, let's see, who was on? Oh, I know what it was. He had Cyrus Vance on, and Cyrus Vance, is the district attorney of Manhattan, folks, and he was on, and it was about the fine that the Justice Department, no, actually, it wasn't even Justice Department. That was New York, right? Got against BNP.
Yeah, for the trading with the enemy.
Yeah, you stay right there. We're going to come right back. We're going to talk about this because this is a larger issue that I think is going to come back to haunt us. It has to do with how Europeans feel about what is happening in versus.
Oh, it's an excellent topic. I can't wait.
Yeah. You stay right there, folks. Andy and I are coming right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We got our man, Mr. Andy Hecht, and we were talking about BNP Paramus. So BNP Paramus, folks, they got a $9 billion fine yesterday. And so what happened is that Simon Hobbs was interviewing Cyrus Vance, and what he was doing, folks, is talking to Vance, and he says, doesn't it seem like you're trying to put these banks out of business? And so Cyrus said to him, he says, hold it. He says, this was basically a sanction, and what they did is that they laundered money, huge amounts of money, folks. We're talking about $190 billion. We're talking about $190 billion from 2002 to 2012. And you're talking about a country that was just pure genocide. They were just killing everyone. So, and then Simon, Andy, went right back to him again, and he says, well, listen, there's a lot of people in Europe that feel that they didn't do anything wrong. I'm in the car coming here. I'm saying to myself, am I hearing things or what? And so in the basis, in the basis of where we are right now, I'm really thinking, I'm saying to myself, when I saw what was going on in the Ukraine, right? Now, I'm going to switch gears to the Ukraine, folks. And the reason being is what is happening is that the companies are getting so large that it has nothing to do anymore with about whether the people are living or dying. It has to do with where's the money being made? Is it being made, not being made? And it's insane, because there's larger problems. And I guess the key is going to be, I think one of the keys are that if, in fact, there's a lot of Europeans that feel that way, then there's going to be huge trouble, man. I mean, period.
Well, the commodities market and the business in general is an international global business.
Right.
So let's understand what the large companies that are the commodity middlemen today. In the old days, 20, 30, 40 years ago, you had companies like Philip Brothers and even J. Aaron, which is now Goldman Sachs, were in that business.
Yeah.
They're not in that business anymore.
Right.
Who's in that business? Glencore. Where are they? Switzerland. Noble. Where are they? Singapore and Hong Kong. We have, because of this Foreign Corrupt Business Practices Act and the Money Laundering Acts and all that, we have always tried to legislate our morality and our ethics to the world. And the world doesn't want it. If you want to go buy cocoa in the Ivory Coast, if you don't come with a suitcase full of money at some point, you don't get the business.
Right.
But if you do that, you could go to jail here. So it's a very tough issue. So what we're doing is, we are pushing this business overseas. Now, the banking business is a different story. Trading with the enemy and all that. And the BNP situation, look, they got fined. They are operating this country. They have to operate under our laws. I understand it all. But there's a bigger issue here. And it's exactly what you said. The Europeans and the Asians, they don't really look at doing business the same way we do. They have a different set of morals and ethics when it comes down to it. They have no problem paying off a government official to secure a piece of business. And that's really the issue.
Yeah, no, listen, I agree. And my take on it, this is what my take is, though. The amount of troubles that are happening, there's going to be more troubles because of the fact that there's a certain amount of society that will just turn their back, and before they know it, that society is going to get wiped out, man. I mean, it's weird, folks, okay? But let me tell you something. That greed is going to kill them, and it's like, because the way that I heard it this morning, it was so nonchalant. It was like, hold it, man, okay? We're talking about not just something political. We're talking about basically just people dying left and right. And you're talking about, this wasn't just, they admitted, folks, to setting up satellite banks. So picture this. Picture that when you're walking into a bank, they set up satellite banks in order to push money out so they'd make sure that, they didn't know it was coming from the Sudan, from Iran, going back into them. I mean, it was what blows my mind is no one's in jail. $9 billion is nothing for $190 billion.
I know.
That's a joke.
I know.
Anyway,
I know, but the French government seems to have no problem with it, right?
Well, they're crazy, man. No, seriously.
I hear you.
There's no doubt about that, man. That's a gaffe, man. That's over the top.
I hear you, but it's
I'll stop.
No, listen. I hear you loud and clear. It's a tough issue. It's really an issue of how we in the United States look at these issues, as opposed to how they look at them in Europe, in Asia, in South America. We're on the forefront of morality and ethical way of doing business.
Thank God.
Thank God. There's 300 million of us. How many are there of all of them?
You know what?
That's the problem.
Yeah, no, I understand that, but well, anyway.
We'll see. We'll see what happens. Anyway, I think it'll be a quiet rest of the week. What do you think?
We only have till tomorrow. Thursday's going to be nothing. Do you know what I'm saying?
Yeah, we're not even on the air Thursday. I'm not. We're.
What do you mean you're not? Where you going?
Oh, that's what our station manager told me. Thursday we're closing at noon, but we are rerunning some stuff.
Who told you that?
Tommy.
He did?
Yeah.
Is it a half-day Thursday?
I think it's a half-day Thursday, yeah.
Oh, man.
But a half-day for you, I wake up when it's your noon, so a half-day for you is no day for me. I'm the big winner, right?
I didn't know the market was closed at 12 o'clock.
Yeah, I think it closes early. It's a long weekend. It's a 4th of July. You got any good plans, Tom?
Yeah, I'm going to have real good plans now if it's closed at 4 o'clock.
That's
12 o'clock.
That's good. All right, that's cool. See, I brought you good news today.
That's always it. You always bring me good news, man.
Hey, one last thing.
Yeah.
Natural gas, very quiet, held where it should. But Westport Innovations, looking nice. You know what made me laugh this morning? WPRT. Made me laugh today so much. I read a little news item. Morgan Stanley initiates coverage of Westport Innovations with a buy recommendation. Where were they at 15?
Well, they just did now they get a banking relationship with them.
Okay, I know. It always cracks me up. I always say, let me check this out.
Though. It's only $18, man. So.
Yeah, no, it's not bad. It's not bad. I mean, I think this stock has some real upside, and it seems like it's catching a bid. It's a very volatile stock.
Even a dead cat bounce is going to get to 22.33, which is that's another $4, man. That's
not bad. Not bad. I got my subscribers into some $15 calls there.
Nice.
So that's good. Yeah. So I don't know. I'm just looking around if there was anything else we wanted to talk about. Meats, baby. You're going to be paying a lot more to barbecue this year.
I'm going to be grilling them all up, baby. Andy, thank you so much, man.
Hey, have a great 4th of July.
You also.
Take care, buddy.
Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great day, great night. Look forward to speaking right here tomorrow. Go get them, folks.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve